Welcome to this video on the Eurozone inflation outlook. The inflation rate in the Eurozone has fallen from over 10% in autumn 2022 to 2.4% recently. That looks good at first glance. But since the beginning of the year, consumer prices have once again risen much faster on an annualized basis than it's compatible with the ECB's inflation target of 2%. This is mainly due to the sharp rise in wages, which is driving up prices for labor-intensive services in particular. Wages are likely to continue to rise sharply. The collective wage agreements already in place suggest that wages in the Eurozone will rise by an average of a good 4% this year. Wages actually paid are likely to rise even more strongly. All this should continue in the years ahead, as labor will remain scarce due to the shrinking working-age population. The sharp rise in wages is having an unhindered impact on consumer prices because productivity in the Eurozone is barely increasing. This is likely to remain the case despite the emerging economic recovery, as there are hardly any productivity reserves due to the labor shortage. Deglobalization also speaks in favor of higher inflation. Higher tariffs and other trade barriers make imports more expensive. In addition, the pricing of CO2 emissions directly increase the price of energy. Moreover, companies will pass on the high costs of the climate-friendly reorganization of production onto their customers. All in all, inflation will in the end settle at 3% rather than at the 2% targeted by the ECB. Nevertheless, the ECB will cut its rates by 25 basis points for the first time in June and follow up with 3 more such rate cuts by the first quarter of next year. However, unlike the market, we expect no further rate cuts afterwards due to the unresolved inflation problem. The ECB deposit rate is unlikely to fall below 3%.